Good evening, everyone, and welcome to our virtual forum, First Capital's Investment Strategy 2024. My name is Nicole Parakrama, and I'll be your moderator this evening. Tonight, we aim to navigate together the rapidly evolving economic landscape of Sri Lanka in 2024, and we've centered it around the theme, Reforms to Stay the Course, with bets on elections. We will begin with a presentation led by First Capital's Chief Research and Strategy Officer, Dimantha Mathew, and AVP Research, Ranjan Ranatunga. This presentation will look at sustainable growth opportunities, external debt restructuring, and investment strategies practically tailored to the current market. Following this, we'll move into an exciting panel discussion with our guests joining us tonight, some of our nation's leading experts, Mr. Vish Govindasamy, Dr. Nishan, and of course, Dimantha Mathew. And you, our audience, will have an opportunity to address all your burning questions towards them. First, a little bit about First Capital. First Capital is a member of the Janashakti Group, and they are a full-service capital market solutions provider. They have a focus on performance first. They evolved from one of the country's pioneer primary dealers in the early 1980s into a leading investment institution. Their service offerings cover capital raising, mergers and acquisitions, and investments across multiple asset classes. They have a track record of industry-leading transactions on the fixed income platform, particularly in the recent years. This financial year, they have achieved some remarkable milestones. They were awarded the most valuable consumer brand by Brand Finance. They earned a spot in the prestigious LMD Top 100 for 2 of their entities, clinched the Bronze Award for the Best Sector Report at the Capital Market Awards 2023, the Silver Award for B2B Brand of the Year, and the Bronze Award for Turnaround Brand of the Year at the Slim Brand Excellence Awards 2023. They also bagged the Gold Award in the investment banking sector at CA Sri Lanka Tags Awards 2023. With all that said, I'm sure you're looking forward to kick-starting the forum. I have been asked to inform you, our audience, that there will be live polls that will pop up on your screen if you are joining us via Zoom during the presentation, and we encourage your maximum participation. We'll have a look at the results of those polls during the panel discussion. Just to let you know that you can also join us via Facebook Live through the First Capital's Facebook page. I'd like to now introduce our presenters tonight. Prior to joining First Capital, Dimantha Mathew headed the research department at SoftLogic Stockbrokers and has also contributed to Capital Alliance and John Keel Stockbrokers. With 15 years of industry experience, Dimantha is equipped with a depth of knowledge and keen insights into economics, fixed income and equity research, corporate finance and advisory services. He holds a law degree from the University of London and also has an MBA as well as an ACMA and CGMA to his name. Ranjan Ranatunga has over 8 years of experience in both local and foreign equity markets. Prior to working in Sri Lankan equity markets, he worked as a senior analyst catering to both buy-side and sell-side funds in the US and the UK. He holds a bachelor's from Staffordshire University and also has ACMA and CGMA qualifications to his name. With all that, it is my joy to get this going and to call upon our 2 presenters.
The journey of First Capital began decades ago when we became the first financial services provider of its kind in Sri Lanka. From our inception on, we marked many more firsts, such as being among the front runners to be listed on the Colombo Stock Exchange in 1994. In 2001, subscribed to be the first ever dollar-denominated bond and becoming the first to launch the Platinum Bond and manage Sri Lanka's first AAA debenture in 2014. as well as being the first to digitize account opening for unit trusts and government securities investments in 2021, leading us to become the first in our sector to be listed on the LMD Top 100 and be recognized by Brand Finance in 2022. Today, powered by our philosophy, Performance First, we celebrate this journey with another first, as First Capital becomes the first to 40.
Thank you, Nicole. Ladies and gentlemen, Sri Lanka has gone through multiple crises during 2022, 2023. And with this economic crisis, we've seen over the last period of 6 to 8 months some type of a recovery. And with that, what we've seen is that that recovery is ongoing at the moment. And if we take a quote from India's first Prime Minister, Jawaharlal Nehru, so what he says is that in a period of crisis or deadlock, in such a situation, people are forced to rethink. So Sri Lanka also has to reform itself. So it's not business as usual. So in such a situation, so we have to go on and continuously reform in order to recover the economy. So looking at the investment landscape, let us look at a quote from Warren Buffett. So in a period of uncertainty, now even Sri Lanka is going through a period of uncertainty. Warren Buffett says, in a period of uncertainty, it is a friend, that uncertainty itself is a friend for people who are long-term value investors. So let us look at what the future holds in 2024. So this presentation will be divided into 3 specific sections. First, starting off with the track record of First Capital over the last 6 months and 12 months, what have we said and what has come true. And then secondly, we will look at the key economic indicators. And finally, it will be the recommendations. So going on to the track record, these are the accuracy levels we usually look at. So beyond the 60% mark, we take it as mostly accurate and then accurate. So 40 to 60% partly accurate, and below that weak accuracy and inaccurate. So if you look at what we forecasted, some of the main indicators, tourist arrivals, tourism earnings, worker remittances, and even inflation and foreign reserves, as you can see, our recommendations have broadly in line with the actuals. However, if you take the credit growth, we've seen slightly slower credit growth, so we take it as mostly accurate. So let's look at the capital market products. So starting off with the bonds. So with the domestic debt restructuring, we've seen the yields significantly drop and come into our targeted yields of 13 to 15%. And with that, we've upgraded our forecast or advanced our forecast that the yields will drop below the 15% mark, and a new target was given, and those targets are yet to achieve. So this is how the yields have declined over the period of time. So if you take the policy rates, we targeted the policy rates to bottom out at 9 to 10%, and currently it has come to that level, and central bank has also mentioned that they will halt the monetary easing cycle at the moment. So we've been broadly in line there. If you take the AWPRR, of course, again, the targeted ranges have been reached. Exchange rate, we had a target of 320 to 360. So currency has broadly been in that range. And then if you look at the equity market. Our target was 12,000 for the year end. The market did reach very close to that 12,000 mark in the month of September, but with the delay in the external debt restructuring and the IMF second tranche, there was a bit of a dip in the market from there on with the rise in yields. So there we allocate ourselves as partly accurate. So let's now look at the key economic indicators. So here, if you take our theme for the evening, reforms to stay course with bets on elections. What does that mean? So Sri Lanka, with the tough situation that we've been in, we had to reform ourselves. So we've gone through a number of reforms. The commodity prices of some of the government institutions have been market priced. So in addition to that, there's a number of other reforms that needs to be done, like the state-owned enterprises reforms and then the external debt restructuring. We've just completed the domestic debt restructuring. So that the reform cycle needs to continue as we progress and to sustain the economic recovery path. And what we believe is, with elections towards the end of the year, also during the second half of the year, it's more likely than not that the government and the president to follow the economic reform program and progress with the IMF reforms. So let's look at what we have in store. So firstly, we will look at the political climate, where we have the elections to look at, and then the policy uncertainty that will come with it. Then on the economic front, you have the recovery of the GDP, the inflation, and then the external debt restructuring, of course, an important one. Then the reforms and the privatizations, and also the credit demand that is there. And finally, on the external front, we have to look at the rupee. Is it going to be stable? Are we going to have a rating upgrade? Then what is going to happen through the global interest rates and the foreign fund flow? So let's look at the political front. We think it's going to be an election year, and we think there is going to be some sort of uncertainty that is likely to rise. So risk levels we have increased from medium low risk to medium high risk. So if you take the period between June 2024 to June 2025, during those 12 months, we think all the elections are likely to be held. Starting off with the presidential elections, going on to general election, and then finally the local government election. Already the elections commissioner has announced the final date that the elections are presidential elections are likely to happen, that is 16th of October 2024, which means by August, September we'll see nominations getting called and the elections getting kick-started. So with that, what we expect is that there is towards the election cycle starting, we will see some amount of uncertainty creeping in, and that will create some pressure among the all the investment products. Next, let's look at the economic situation. We think it's likely to be slower than expected. However, we maintain our risk levels as medium low risk. So first, starting off with the timeline, IMF timeline. So we've broadly been here, accurate during 2023. And then if you look at the 2024, I've already mentioned that we are looking at elections during the second half of the year. However, in the first half of the year, we think there is likely to be some amount of delay in the bondholder negotiations, which will obviously delay the IMF third tranche. So we think we're looking at somewhere around June for the third tranche, and of course the implementation of the external debt restructuring once that is getting completed. So beyond that, if you look at the external debt restructuring, currently the official credit committee has reached the deal for the bilateral loans, and then on the IMF front, then on the ISB front, the International Sovereign Bonds front, the negotiations are currently progressing. So from that point onwards, I would like to hand over proceedings to Ranjan to take you through the next set of economic indicators. Over to you, Ranjan.
Thank you, Dimantha. Thank you, Dimantha, for taking us through the past track record of First Capital during the last year, as well as on the political front and what's happening on the IMF front as well. So before we move on to the next section, which is the economic indicators and the outlook part, let's have some fun first. So as Nicole explained at the beginning of the presentation, we have a few polls going around. And to start off the poll, we have the inflation. So I think the inflation, the poll will come on screen now, and you will have 30 seconds to vote on it. And I will read the poll for your benefit as well. So what is your forecast for inflation by December 2024? And please mind that for December, end of December last year, we had an inflation of 4%. And so here we are asking for the year-end inflation for 2024. Right. So moving on, we have another one here, that is the GDP forecast. So let me come into the question. So what is the GDP outlook for 2024? So let me give a small background to it. So Sri Lanka had past six consecutive quarters of negative GDP during ending from second quarter of last year. And for the first time in 6 months, 6 quarters, we had a positive GDP of 1.6% for the third quarter. So what we are looking for is the GDP growth for 2024. Please submit your answers in. Yeah. So thank you for participating on that, and we'll move on to our rest of the presentation now. So yes, so starting off with inflation. Yeah, inflation is one of the key discussed topics during the past few months, with the majority of people talking about the prices of carrot and other vegetables. And if you can see on the right-hand side of the left-hand side of the screen, you have a few price changes during the month of October to November, as well as November to December. And we have seen a lot of red arrows there, with majority of the food as well as majority of vegetables and prices of food increasing during the 2 months. And if you look at on a positive note, we have seafood as well as fruit prices coming down during the past few months. So with that in mind, here we have a composition of a food basket that is developed by First Capital Research. In here we have a food inflation of average 4% family for a month. And if you look at the dark blue line, we can clearly see that the food inflation is climbing and touching almost at around 50,000 levels by January 2024. And thinking on that, this is our forecast for 2024. For the month of January, we at First Capital believe that inflation, CCPI inflation would touch somewhere around 4.8%. And this is increasing from 4% recorded in December. And based on our outlook, we expect CCPI inflation to peak at between July to August at around 6.8 to 6.9%. However, we expect the average inflation of 2024 to stay within the CBSL guidelines of 5%. Next up, we have consumption. So earlier at First Capital, we were thinking that consumption will be the biggest driver of economy in 2024. But however, with few tax enactments coming into play, such as the value addition tax increase from 15 to 18%, as well as the relaxation of VAT thresholds at the beginning of the year, we believe that the consumption may have dropped, and this will slow down with GDP growth in the coming year. So thinking on that, we have the GDP growth forecast for this year as well as the next year. So initially last year, First Capital Research, we thought that GDP growth will be somewhere around 3 to 4% for this year. But however, with the consumption slowdown, we believe that GDP growth will be somewhere around 2 to 3% for this year. And for next year, it will be between 3 to 4%. However, although that we have downgraded our estimates for this year, we are still more bullish than the multilaterals. They're expecting a marginal growth between 1.2 to 1.8% for 2024. So, given that we have looked at consumption before, we will be moving on to private sector credit next, because we believe credit will be one of the few major driving forces of GDP going forward. So, we saw during last year, within the first half of last year, CBS continuously increased rates, and from June onwards, we saw CBS cutting down rates down by about 650 basis points. So, with this in mind, for the year of 2023, we are expecting private sector credit growth to record a marginal degrowth of around 0.9%, while in the current year, we are expecting the private sector credit growth to cross 7.5%, while in 2025, this will expected to cross 10% levels. So, with private sector credit growth turning positive, next up is liquidity. So, prior to the signing of the IMF start level agreement in September, we saw wide swings between positive and negative in terms of liquidity. But however, since the staff level agreement has been struck, we saw these swings becoming very less and being very narrowed down. And now it is at a very lower level in terms of the negative liquidity swings. And you look at the CBSL holdings, with the CBSL not opting to print money now, we have seen CBSL holdings come down at consecutive for the last 3 months, and it's around 2.7 trillion currently. In this slide, we have a few of the targets that have been set by the IMF as well as the budget. So, and as you can see, the 2023 numbers have all been beaten, and these all targets have been touched, and these have been achieved. So, in terms of revenue, so Sri Lanka saw during last year, we saw personal income taxes come into play, and during the beginning of this year, we saw VAT increases coming into play. So, with all these together, Sri Lanka managed to achieve a revenue of 3.1 trillion for 2023. And going forward in 2024, with the VAT enactments in play, we believe that Sri Lanka will achieve a revenue of around 3.7 trillion for the current year. And this will further increase to around 4.2 trillion in 2025. Also to note that in 2025, the government is planning to introduce property tax. So, this will be also one of the things that will be driving the revenue forward in 2025. And if we look at revenue to GDP wise, in 2022, Sri Lanka achieved just a mere 8.2% of GDP compared to revenue. So, in 2025, we are expecting this to go up and touch around 12.8% in terms of revenue to GDP. So, there has been a significant improvement going forward as well. So, with revenue growing steadily, comes to primary surplus. So, last year we had a primary negative surplus of around deficit of around 900 million. But going forward, we are expecting this to be positive, mainly because of the active revenue collection and initiatives taken by the government. So, with that in mind, we are expecting the primary surplus to be somewhere around 241 million for the current year, while this will initially go up to around 615 million by 2025. Then, having a look at the primary surplus, next up is budget deficit. So, in line with the primary surplus, the budget deficit also has been coming down, mainly due to the tight expense control as well as the revenue increasing mechanisms that has been introduced by the government. And with that, we have seen budget deficit also falling in line. We had a budget deficit around minus 10.3% in 2021, 2022, while this is expected to come down to around 5.7% by 2025. So again, having said so many things about the economic indicators, let's have some fun again. So next up we have the third question, which will be on the tourist arrivals. So Sri Lanka achieved a tourist arrivals target of 1.5 million last year, and for this year, what we are asking is the tourism arrival targets for the current year, for 2024. You have 30 minutes to submit, 30 seconds to submit your answer. Thank you for that. So let's move on with the presentation. So having discussed the primary balance, and then moving on to next we will have a look at the trade deficit. So during the years of 2022 and 2023, if you see in the chart, the trade deficit had come down drastically. That is mainly due to the import ban that has been there in the country since the beginning of 2022, with almost about 3,000 items being banned from importing. But since the IMF agreement, staff level agreement in April, we have seen government taking initiatives to relax the import ban that has been there. So with that, Sri Lanka has relaxed almost about 2,000, close to 2,800 items from the ban, and there's about 200 left in the list more. So with that in mind, and with and given that Sri Lanka is historically a consumer and import-driven country, we believe that the imports will pick up down the line towards the future. So with that in mind, we are expecting trade deficit of around 4.8 billion for the current year, for the last year, while this will go up to around 5.9 billion by 2025. So I hope that these tourism targets are in line with your votes, and now let's move on to our votes, our forecast here. So as I said to you before, in 2023, Sri Lanka achieved 1.5 million arrivals while recording a revenue of $2 billion from tourism. We at First Capital are very bullish on tourism. So we are expecting that arrivals numbers will hit somewhere around 1.9 million for the current year, while earning about $2.8 billion in tourism earnings. While this will further go up to and will surpass the pre-pandemic arrivals of 2.2 million arrivals and reach 2.5 million arrivals by 2025, while earning 4.1 billion rupees in terms of tourism earnings. Next up, we have the remittances, which is also one of the key components in terms of the balance of payment. So, in line with the tourism increase and the country getting stabilized and the rupee being stabilized, we are expecting remittances to continue flow into the country. So in 2023, we are expecting remittance to be somewhere around 6 billion USD for the full year, while this will climb up to about 7.2 billion by 2025. So with these funds coming in, with the inflows from tourism and remittances picking up significantly, we are expecting the budget, the BOP, Sri Lanka to turn from a BOP deficit to a BOP surplus. And however, the BOP surplus is expected to come down slowly towards 2025 with repayments starting to happen after the EDR is completed. But however, fund inflows from the multilaterals is expected to cushion our BOP position. And that is been that you can see that the expected fund inflows from IMF, World Bank and ADB on the chart on the left hand side. Having talked about the BOP, let's move on to foreign reserves now. So in 2020, last year, we at First Capital, we correctly predicted that Sri Lanka reserves will be somewhere around 4.4 billion for 2023. And Sri Lanka has successfully and achieved that. And now we are expecting that Sri Lanka will chase somewhere around $5 billion for the current year, while this will increase to around 6 billion by 2025. This is an interesting slide we have here. So the first slide on the left-hand side shows what happened to our debt maturities prior to restructure as well as post-restructure. So the darker line color shows the debt, the maturities we had to pay out prior to debt restructuring, and you can see the maturities have been coming down slowly. But something note is that although the maturities have been coming down, we have been pushing these past 2028, and that is why on the right hand side of the chart we are seeing the lighter blue one skyrocketing after 2028. So this is mostly due to the restructuring of outstanding debt. So we have here a few of positives and negatives of India economic outlook, and as you can see, we have maintained our economic outlook as medium low risk. So next up, we have the external pressures side, and here again we are maintaining our outlook at medium low risk. Starting off with, we saw last year with CB as in line with the central bank increase in rates. We saw other global banks such as central banks such as the Fed, the European Central Bank, as well as the Bank of England increasing rates. But now we have seen a small pause in terms of rate hikes, both locally as well as globally. And in terms of the global front, the Fitch is expecting that the Fed will cut rates by about 75 basis points. So these are all positives that is coming into the Sri Lankan as well. And what we saw during the last year, as soon as the DDO completed, we saw credit ratings on local currencies. And going forward, with EDR currently in progress under negotiations, as we are expecting that as soon as the EDR finishes, we will see foreign currency rating upgrade as well. And already few of the rating agencies have already confirmed that Sri Lanka is eligible for a rating upgrade once EDR is completed. So as you can remember, we were talking about two slides back, we were talking about the global rates coming down in the future. So here is a clear example of how the fund flow has shifted from emerging to frontier markets. If you look at the chart on the right hand side, the one on the below, it shows when the rate drops, how the funds have shifted. So these are all positives that are building up to becoming Sri Lanka attractive again. And finally, just wrapping up the external side, we have global central banks cutting rates, which is also positive, while the improvements in credit ratings that is due is also going to be a positive, something positive. As well as finally, the shift in fund flows from emerging to frontier markets are all positives. That is why we are maintaining our external outlook at medium low risk. To take you up with the next couple of slides and give you the update on the recommendation on the fixed income side, I will hand over the presentation now to Dimantha. Dimantha, over to you.
Thank you, Ranjan. So looking at the overall trend, as you can see over the last 2.5 years, how the risk levels have gradually reduced, and by last June we've seen all three elements moving into the medium low risk category. However, this time we've downgraded one of the categories, which is the political side, to medium high risk. So with that, let's go to another poll. So take a guess poll on the exchange rate. So here I'll read out the question. What is your projection for the exchange rate by December 2024? So you have 5 answers to vote: below 280, 280 to 300, 300 to 320, 320 to 340, 340 and above. Just to give you some help, as at December, the December end, the exchange rate was 319 rupees, so 320 rupees, and slightly appreciated to 318 rupees. Right. So let's move straight away into the recommendations that we have for 2024 for the capital market products. Starting off with the bond section. So we are looking at, we have a set of criteria that we look at. We've divided it into primary criteria and secondary criteria. And we've discussed all the economic indicators in the presentation. So I will brief you some of the categories that has changed the risk level. So the foreign reserves have been upgraded to medium low risk, and also the credit has been section has been downgraded to low to medium low risk with the acceleration in credit. In addition to that, inflation has been upgraded from medium low to low risk levels. So on the secondary criteria, so I'll only mention the changes that we've done. Here on the external front, with a more stable rupee, we've reduced the risk levels to low here. And also on the, obviously on the political front, as we mentioned, we've downgraded the risk from medium low to medium high. So how do we use that? We put all this and build something called a fixed income health score. How do you use it? If the health score is onto the high side, that means the pressure on interest rate is low and there's a chance for interest rates to decline. So as you can see in the health score, we are expecting some amount of pressure to come in, possibly towards the second half of the year. So let's start off with the policy rates. Of course, we are expecting rates to be maintained at the current levels. However, in the policy statement by the central bank, they did mention that they are looking at moving into a single monetary policy corridor. So which means that there is a possibility that they will use that to possibly give a rate cut on the SLF side, we believe, which can then, if you give a rate cut of 100 basis points, then you can have the SDF and the SLF at the same level. Also, with the economy slightly onto the slower side during the first quarter, obviously we think there's a higher chance of such a rate cut only on the SLF side during the first quarter. Beyond that, we think the rates will be maintained. So we expect we extend our December expectations to March. So we maintain the targets from 11% to 13.5% for the overall yield curve, and we think we are more bullish towards June. We think with the completion of the external debt restructuring, there could be bullishness among investors. So we think interest rates could, or bond yields could, come down as low as 10% to 12.5%, with 1 year at 10 to 11%, then 5 year and 10 year at 11.5 to 12.5%. However, towards the second half of the year, there could be some amount of pressure coming in with GDP growth accelerating, credit accelerating, and consumer demand accelerating. So with that, we feel that there could be some amount of pressure. We think it will be broadly about 100 basis points. So overall recommendations on the bond portfolio, we think you should maintain your portfolio. However, if the yields start to drop below the 13% mark, which we've already seen some of the short tenors starting to drop, that's where you should consider taking profits. So still on the mid tenors and the long tenors, they have not yet come below that mark. So however, when it gets closer towards that mark, we think you should consider booking profits, or at least starting to book profits. On the banking rates, we think the AWPR will come to 10 to 12% by June, and then with pressure on demand for credit accelerating with economic growth, we think it will slightly move up again to 11% to 13% range. Going into the exchange rate, here we think with the introduction of the taxes, there could be some amount of a slowdown in the overall economy, and private consumption likely to slow down. So with that, imports sort of slowing down, especially during the first quarter, which may give with the peak season of dollar inflows, especially on the tourism front. So we think there could be some amount of appreciation pressure For the exchange rate, I think we are already seeing it during the last 1 to 1.5 weeks. So we are upgrading our exchange rate target from 310 to a range of 310 to 330 during the first half. However, with the economy accelerating and consumer demand picking up, being a net importer, there could be some depreciation pressure towards the second half of the calendar year. So we think it will come to a range of 320 to 340. So to take you through on the equity recommendations section, I would like to hand over proceedings back to Ranjan. Ranjan, over to you.
Thank you, Dimantha. So before we go on to the next section, which is the equity recommendations part, let's have another poll again. So this time it's on the SPI. So if you know, SPI closed last year at around 10,500 levels, and it's currently hovering on the same levels as well. So what we are looking for here is, what is your inflation? What is your prediction on the SPI, that is the All Share Price Index, in 2024E? And on the screen you will get 5 answers, which will go from below 10,000, between 10,000, 11,000, 12,000, 13,000, and 13,000 and above. So moving on, we will move on to the equity market recommendations now. So we at First Capital, we have been looking for a relationship with equity markets and rates during the past few months, and we have identified that 1-year Treasury bill has the strongest relationship, where the 1-year bill falls below 12%. We have seen a massive amount of volumes picking up in the equity markets, and that is evident from the chart that is in front of you, where the rate has fallen below 12%. We have seen massive spikes of volumes in the equity markets. Given that we are forecasting rates to 1-year bill mostly to come down between 10 to 11%, we believe that the shift in volumes will happen again, and it will happen soon. So these are some of the incentives that will further boost the prospects for equity market. So to start off with, during the last year, during the months of October and November, there were a few discussions going around that capital gains on banks and primary dealers are going to be taxed, and the equity market is going to be taxed as well. But positively, it didn't happen. None of them were touched by the budget. So this is a big positive for the equity markets for 2024 and forward. And also, we have seen earnings also picking up strongly. And to discuss that, we will discuss that on the following slide. So another incentive that is driving forward investments is that the valuations of CSC. So currently CSC trades around 11.1 times PE, and this has been mostly due to an fall in earnings that we have seen during the first half of last year, and because of that we saw PE peaking at around 11.1 times currently. But however, going forward, we are expecting earnings to recover. So if you look at the chart in front of you, towards the second half of the year, we are expecting the earnings recovery that we have expected has come out well so far. And if you look at the first 2 quarters, that was a slowdown I told you at the beginning of the slide before, where earnings fell down by around 65% year-over-year during the first quarter, and fell down further by about 70% year-over-year in the second quarter. But coming into the third quarter, we have seen a substantial set of recovery in terms of market earnings, where the earnings have come down only by a mere 4% year-over-year. And going forward, in the current quarter, that is the December ended quarter that we had last month, we are expecting earnings to pick up by 1% year-over-year. And with the results that have come out so far already, we have seen that manufacturing sector with companies like Ceylon Coal Stores and the tile sector companies, all these companies performing well in terms of market earnings. And if you look at the tourism earnings companies that has come out so far, for example, like something like the Fort Resort, they have also reported super profits in the month of December, the last quarter of December. And for instance, the NBFs and banks are also expected to do well in the current quarter as well. And we have already received results of LFIN, where that is LB Finance, where they have done very well during the last quarter. So with that in mind, we are expecting earnings, market earnings to jump, to contract by about 54% in 2023, mainly because of the slower first half. But coming into 2024, we are expecting market earnings to jump by about 37% and increase by about 18% further by 2025. So as I said to you before, CAC currently trades at about 12 times PE. Sometimes when you look at this, this may seem a bit expensive, but we are saying this is not, mainly because we are yet to see the good earnings come into the market now, and we are just seeing these coming in now. And so with the pickup in earnings that is expected, together with the extra incentives that we had talked before, we believe that the 12 times PE for the CSC is a good entry point for investors. And if you look at the targets that is set for 2024, we are expecting ASP to reach around 13,500 levels. So another crucial step that we have to, that is in progress, is the external debt restructuring, or the EDR. So what we saw during September last year was when domestic debt optimization, as soon as DDO finishes, the entire market re-rated, starting from the banks, where those were the highest to gain, but the entire market re-rated. So we are expecting the same thing to happen this time as well when EDR completes. So this is something to look forward to in terms of equity investments in the current year. So this is something that we at First Capital we have maintained over the past few years, but just explaining a bit on to that. So globally, in an when it comes to investment, the recommended investments is a balancing between equity and fixed income. So what we are saying here is, with the dedicated equity amounts that is dedicated for equity investments, go in 100% right now, because we think that this is the perfect time to buy in on the opportunity because of the uncertainties that is prevailing in the market. So in the past recommendation, we have gone with 100% equity allocation, and we continue to maintain that in the current year as well. So saying that, we will. So we are almost at the end of our presentation here, and before we wrap up, I would like to bring up something that Dimantha said at the beginning of the presentation, of a quote from Warren Buffett. Uncertainty is usually a friend of an investor who invests in long term. So in 2024, we are heading into an era of uncertainty, because we have few uncertainties. The EDR discussions that is currently underway, as well as the key elections that is coming in Sri Lanka, as well as globally. If you know that global elections, US elections and the Taiwan elections is expected to happen this year. So together with that, we have the wars that is ranging in Europe and in Gaza. So all these brings uncertainty to the picture. But something to note is that with every uncertainty, there's opportunity to buy, and this is for the brave. But for the people who are investing, who are friends of investors of long-term investing as well as fundamental investing, we believe that this is the perfect time for you to come in and grab the opportunity. So having said that, we will wrap up the presentation now, and I will be handing the proceedings to Nicole to take you through the panel discussion. Thank you for joining.
Before we move into our panel discussions, shall we have a look at the results of our polls? We'll just get it up there for you. Okay. Our first question is, what is your forecast for inflation by the end of this year, by December? The majority of you said between 5% and 7%, closely followed by an estimation of 3 to 5%. The next question was, what is your outlook on GDP for 2024? Again, we have maybe a close one, but the majority saying between 1 and 2% growth, followed by between 2 and 3% growth. Then we asked you, what is your expectation for tourist arrivals in 2024? So here, 1.9 million and above was the majority of votes, with a close second for 1.7 million to 1.9 million. We next asked what your projection was for the exchange rate against the dollar. So here we have 320 to 340 being the popular answer, and then a little more of a conservative estimate of 300 to 320 against the dollar. Your prediction for the all share price index, let's have a look. Okay, so 11,000 to 12,000 was the majority, but closely flanked on either side. So between 10,000 and 13,000 seems to be the estimate by most of y'all. Do we have any more questions? Okay, so now with great joy, let's move on to the panel discussion. The panelists sitting next to me need no introduction, I'm sure, to most of y'all, but I'll do my duty. So Mr. Vish Govindasamy, as most of you will know, has been at the helm of Sunshine Holdings PLC for 26 years and has only recently taken a step down as Group Managing Director and exchanging it for the post of Deputy Chairman. Sunshine Holdings is a diversified conglomerate, which is today one of Sri Lanka's top 50 listed companies. Vish was also the CEO at the time when they partnered with the giants Tata India to acquire Vatuvela plantations at the time of privatization from the government. And he is credited with playing an instrumental role in transforming it into the highest capitalized regional plantation company to be listed on the Colombo Stock Exchange. He also, in his tenure, launched the tea consumer brands Zesta, Vatuvela, and Rankahata, which in their relatively short tenure comparatively to their competitors skyrocketed past even MNCs to take leadership positions in the Sri Lankan market. Vish holds a BSc in Electrical Engineering from the University of Hartford, USA, as well as an MBA. He is a fellow member of the Institute of Certified Professional Managers of Sri Lanka and is the outgoing chairman of the Ceylon Chamber of Commerce, at a very difficult time, I must add, and a past chairman of the Employers Federation of Ceylon. Dr. Nishan also needs no introduction as the executive director of Verité Research, one of the most credible independent think tanks, who, amongst other things, have made important headway in leading the public sector towards raising their standards in transparency and accountability through analysis and advocacy. As an economist, Dr. Nishan has experience in policy and private sector, which he gained through instrumental roles played in national policies such as health sector reform, social security, and tobacco and alcohol by serving on multiple presidential task forces in Sri Lanka. Dr. Nishan also currently sits on multiple private sector boards and consults regularly as a strategist for some of the region's largest firms. With his undergrad studies done at Harvard, he moved on to do his graduate studies at Oxford, where he taught and researched economics at both of these academic institutions. He also later served as the executive director of the International Center for Ethnic Studies and the Sri Lanka Foundation Institute. On that note, I'd like to start the the questioning, and perhaps I'll start with Vish, being closest to me, and also having had the privilege of working under your leadership for 6 years at Sunshine Holdings. I think I know your view on this topic, but for the benefit of our audience, I think we would like to know about the relaxation of palm oil replantation, the ban on palm oil replantation. What is your view on this relaxation, and what would be the benefits, what would be the drawbacks, and how could it impact Sri Lanka ecologically?
Thank you, Nicole. Thanks to First Capital for inviting me to be here, part of this discussion this afternoon. My take on the ban, it should have been never banned to begin with. Palm oil is not a foreign crop to Sri Lanka. It's been in this country for more than 70 years as of what I know. But unfortunately, for whatever reason, at the powers to be thought fit to have it banned. But to put things in perspective, before coming here, I was just looking up the two largest economies that grow palm oil, namely Indonesia and Malaysia. Indonesia with 14.5 million hectares of palm oil, and Malaysia with little over 5.5 million hectares of palm oil. If there was a ecological or environmental issues, or for the reasons that was mentioned in Sri Lankan ban, that we would lose all our water source, etc., then those two places should have become a desert by now. If you take 14.5 million hectares, and Sri Lanka has little over 10,000 hectares planted right now, and the plan is only to get up to 20,000 hectares. So where is 20 million hectares and 20,000 hectares? Right. So just for you and the audience to have some perspective on what we are talking about. So it was completely unfounded to have this ban put in. As an industry, the Palm Oil Association of Sri Lanka has been continuously working with the various groups. There is no scientific evidence that has been shown or proved to the industry by whoever decided that this has all these effects. Now, there are cases where in other countries where virgin forests were cut out and there were endangered species at danger, etc. As far as Sri Lanka is concerned, there is no forest that's getting replanted. We are only replanting other crops which have become economically unviable, right? For whatever reason. I mean, these crops have cyclical trends. Today, rubber being one of the crops where it is not economically viable. So those are the lands that are getting planted with palm oil. So we are not going and cutting down forests and killing orangutans and things like that, which people blame for environmental issues. So I certainly hope, based on the new evidence that has been shown, and both Malaysia and Indonesia has been very supportive of our efforts. India has come forward. The government of India, which is the largest importer of palm oil, has decided to plant over 1 million hectares of palm oil because they feel, foreign exchange leaving the country because of edible oil. So again, a decision like 1 million hectares wouldn't be taken if there was, environmental issues. So that's all my take. I mean, I can speak on this subject, as you said, for as long as you want. But I have just given you some perspective. But the ban hopefully will be lifted, and we have given some rules and guidance which is now internationally available, called the RSPO, Roundtable on Sustainable Palm Oil. There are very strict rules, so if you obey those rules and get certified as an RSPO plantation, then none of these issues will be there going forward. So hopefully we will have this ban lifted, but even if the ban lifted, it'll take something like 4 years before we could have a plant on the ground.
Right.
Because we would have to import seeds because we don't have a seed producing facility in Sri Lanka. So these seeds will have to get imported. And Sri Lanka doesn't allow seeds that are already grown. So we'd have to bring raw seeds, germinate them here. So the whole process is about 18 to 24 months before a plant can go on the ground. And then it takes another 36 months before it could bear fruit.
Right.
So it's a long gestation period. And as Sri Lankans, we all know 5 years is a long time before anybody changes their mind.
Yeah, exactly.
So we certainly hope that there will be a stern decision and a long-term projection done. I think this is a good crop for the country because we spend a lot of money. Sri Lanka imports something like 250 million tons of edible oil, and 20,000 hectares produces maybe 30,000 tons. So it's just the economics is just completely on the way to having palm oil for the future.
Right.
I hope I have answered your
Thank
question.
you. Yeah, very helpful, and hopefully science prevails in this matter. Maybe Dr. Nishan, if I can ask you the next question. I'm sure it's a question that a lot of our viewers have, which is, at what point do you think Sri Lanka can declare that it's out of the woods? Is there, in your opinion, can it be linked to an event such as the next IMF tranche or the debt restructure, or maybe by reaching certain thresholds of indicators such as GDP, etc.? What would your views be on this?
Thank you, Nicole. Just want to make sure my microphone is working and you can all hear me. And I'm grateful for Dimantha and his team and First Capital for inviting me to join you today. I think when we discuss this issue of, when is Sri Lanka out of the woods, people focus on particular pivotal points. So the domestic debt restructuring was one of that, about increasing confidence, the releasing of the IMF program tranches, initially getting into an IMF program, and then we are all now looking forward to the external debt restructure. I think that there is a further step to go. Sri Lanka is out of the woods when its debt becomes sustainable, and debt sustainability comes not only with the external debt restructuring, but then the ability to access international financial markets. To do that, your credit rating has to go above B minus, at least up to B. So you remember that in April 2020, it's when our credit rating dropped from B to B minus that Sri Lanka got shut out of international markets and the problem of diminishing reserves kicked in. Currently, of course, we are not repaying our debt. Because we are not repaying our debt, the reserves can keep building. But when we start repaying the debt, even though the terms have been made sweeter, the real litmus test of when do you come out of the woods is when the world decides that you're credible enough, that you're good for the money, and the agencies that evaluate that are able to give you a credit rating of B. So that is still significantly further forward in the future, but of course it won't even begin that process. I heard Dimantha say earlier that, or not Dimantha, I think your colleague said that that credit ratings are likely to go up after EDR, external debt restructuring. But of course, they have quite a long distance to go to get to B, and that is the point we should be focusing on. So the answer to your question is, when Sri Lanka regains access to international financial markets, you know that you've regained the status of being credible or being good for the money in the eyes of the international lenders and financial agencies.
Great. I think this was the first time that Sri Lanka as a nation has defaulted since independence, if I'm not mistaken. So yeah, hopefully we'll get back up there. So maybe the next question for Dimantha. again, a more broader question before we kind of narrow in. So if 2019 onwards has taught us anything, it's to expect the unexpected. This year we're already facing elections which are quite unsettling in the USA, not to mention here at home, and wars in Ukraine, Gaza, Lebanon, to name a few. What connection or what interconnection and impact do you see these things have, external events happening to have on the Sri Lankan economy?
So something interesting is the wars that are happening globally. So something to look out for is obviously there are other than the two wars that are already in there. There is certain other factors that could create further wars also in the Middle East. There is something happening on the Iran front, then on the Lebanese border. So a lot of things happening simultaneously. So what could happen is earlier we were talking about that the fund flow where the fund flow could shift to emerging and frontier markets once the US interest rates peak, and past track record has shown that emerging and frontier markets does better 12 months after the last rate hike in the US. So now how things can change here is that if US starts getting involved in a war of this nature, so then there could be a rise in their expenditure front. So then is there a possibility for future rate cuts to happen and decline in interest rates on that front to happen? So on one side, if that happens, then the US market may pick up, and that will be good for Sri Lanka's exports. And on the other side, if it doesn't happen, then US rates remain high, and it might be remain attractive for some of the foreign investors to go in and invest. Obviously high interest rates, you have AAA funds there, so AAA financial instruments there. So then in such a situation, will the rates actually come down, and will the US economy bounce back? So at the moment, obviously they are trying to slow things down there and bring down inflation. So I think there is likely to be, if the US economy does not kickstart now, with Sri Lanka only having a few export items. I mean, apparel contributes to around 30% of exports, and that not growing is a big problem for us. So in that front, then what will happen to our current account? Will it start to improve? What will happen to our balance of payments? How about our net inflows? Will it flow in line? I think all those things is likely to go negative.
Mm-hmm.
So that's a major risk that we have on the global front.
Right. So a lot of things to look out for in the coming year. Dr. Nishan, I might combine two questions together here for you because they have similar sort of tail ends of the question. So one is on the external debt restructuring talks that you mentioned nearing completion. When can we expect its conclusion, if you have any idea? And second, to couple that with the second question, with elections being scheduled here in Sri Lanka, for both these events, what may be the impact on IMF discussions and the release of the third tranche, and on our lives as individuals?
So the second question was on?
The elections.
Elections.
Yes, the local elections.
Super. So I think these two questions speak to different issues, and
Sure.
maybe let me take the first. On the external debt restructuring, when we set up the IMF program, when we started in March of 2023, we were expecting to complete external debt restructuring by June of 2023. That was the plan. And the plan was, of course, hatched much earlier, starting in August and solidified as a staff level agreement in September 2022. And so there was expectation that Sri Lanka would move at a clip and get this done by June of 2023. Since then, we've had sort of regular announcements of delays in the plan, and the latest announcement has been to complete external debt restructuring by the end of the next review, which is going to be in April, the IMF review. So
Right.
it moved from June to August to October to December to January, and now we are at April. I've heard several government officials and state ministers even giving dates as long as June for completing the process. But I think the expectation, if you read the fine print on the IMF program, is at least the terms and the structure of the external debt restructuring should be completed by April, even if its execution might take a little longer. Now, I think there's great value in completing it early, and we can even shoot for March, but that's the timeline, Nicole, that's currently in play. Now, I will come back later and maybe we can discuss it as to how important is it to do it quickly and what else is important to do, okay? So maybe let me stop there on that question and take your next question on the next round. Currently, that's the plan, and Sri Lanka needs to, think about, how important is getting it done soon versus other factors which we can discuss. I think maybe your second question will come back to me on.
Sure.
After that, yeah.
Sure. Yeah. Vish, I understand that banks are now seeing a turnaround in liquidity, and we saw central bank in its 2024 roadmap proposing to move into the single-digit rates. At what speed do you think we can implement these single-digit rates, and what outcomes can we expect on lending and deposit activities in the banking sector?
Nicole, you put me on a spot here. So I'd just like to say that these comments, whatever that I make, are my own and does not have to do anything with the CBSL, also of my role at the CBSL. I mean, having seen the monetary policy report that came out on 22nd of January, I think it clearly spells out what the central bank intends to do in terms of the policy rates and going forward, because we're talking about economic growth and how do you have that happening, and especially there are some sectors that since COVID, just like, for example, construction is completely stuck because of the high interest rates that we have envisaged. So it is only in that form that they're looking at some of these industries to kickstart. Even a small thing like trading, even when they relax the imports after a little over a year's worth of import ban, you don't see huge amount of imports coming because even a small importer, you need working capital, and to have working capital, you have to go to a bank, and then you can't pay that kind of silly interest rates to do any business, because end of the day, people do business to make profits.
Right.
And profits come based on availability of funds. So I think that is what the intention of the CBSL, to see economic growth, and for that, banks to make sure that they keep bringing the interest rates down as the CBSL brings its policy rates down. Of course, at this announcement, they've kept it the way it is going forward. And I think in the presentation we heard, and even now we are discussing of all the uncertainties around the world and in Sri Lanka. So all this will matter on, but I can say for the next 6 months at least, my predictions are the interest rates will either stay still or keep coming down. and there will be continuous pressure from the regulator to the banks to bring those interest rates down so that we can have some economic activity. It's unfortunate that right at the beginning of this year we had the VAT that came into play and things have slowed down a bit. There is general economic slowdown with inflation picking up from where it was. The net money to be spent in the people's hands have got less. There is a little pressure. But I think as people get used to it and when the prices stabilizes, things will get normal. And the big thing is we are seeing real potential in tourism. So that will help us to get the economy forward. So I don't think there's a magic wand that CBSL will use on the banks other than continuing to tell them that they need to get and bring the rates down. And you can see the bond yields coming down. So obviously there won't be a lot of ask from the government to invest in bonds either. So I think that's the road, and that's about what I can tell you at this point.
Thank you. Yeah. And noted again for our viewers that this is Vish's personal comments and not official comments. But on a similar note, I mean, you mentioned that the disposable incomes. Again, I'm just going to direct this to you, Vish. That disposable incomes are under threat because of the tax increases. And you also mentioned that construction has been sort of throttled for the last couple of years with the high interest rates and just difficulty in pricing, for example, when you have a 2-year, 3-year lead or even a 1.5-year lead. So what sectors do you think will be the biggest drivers of growth in 2024? Will it be construction having a boom, sort of filling the pipeline that may be there, or FMCG? I know this is an area that you have a lot of experience in, or might it switch to industries like IT or logistics or anything else?
Personally, I think it's the one industry you didn't mention, which is the tourism industry. I think that is the low-hanging fruit, and I really hope that we put more effort on the tourism industry. And Sri Lanka, there's been many reviews that Sri Lanka has got on a favorite place to visit. And I personally think we can easily surpass the 1.9 million tourism numbers that has been predicted if we keep doing things right, if we make it more comfortable for the tourists to come. Of course, we have seen our national airline having lots of issues. If we get that sorted out and we have better connectivity from India, India is booming, and that's a huge population waiting to travel. It's actually cheaper to come to Sri Lanka than to travel within India. So that's a huge population just at our doorstep that we need to really work at bringing them here. Our airport has to completely improve. It's unfortunate that entire development activity has come to a standstill, and until this debt restructure is done, nothing will happen there. But for me, I think the big industry and the big win for Sri Lanka will be the tourism industry, and then followed by obviously the what people need, which is the FMCG. Going forward, I think the construction will probably take a little bit of time, because I don't think the government is ready yet to spend on development activity. Even though there's been a lot of talk about, we are going to start our development spending, etc. But I know government is really pressed hard and making sure there's a lot of cuts on expenditure to meet the IMF targets, etc. So those are my thinking on the growth areas.
Right, thank you. Swinging back to Dimantha maybe, and Nishan, I'm saving your question for last. I thought we'll end this session before we open it up to the audience, because I think it's a good one to end on. So just before that, Dimantha, we're seeing the increase of the taxes and uncertain weather, and carrots have become a luxury food item. Do you think these factors will cause inflation to overshoot the central bank guidance corridor of 5 to 7% in the near to medium term?
Yeah, so the central bank expects rates to be around the 5% mark, and so what has happened is I think we currently have a major supply side issue with the weather coming into play, and also with that food inflation coming in. However, if you look at over the years, basically it has been a trend for December, November, December, January periods. Every year you see this food inflation coming in. So, and then after the supply sort of normalizes with imports and the season coming in, then the food inflation gradually settles out. But here this time we have an added thing here where the VAT has come in. However, if you look at the base effect from last year and then calculate on that, actually there's nothing too much to be worried about. So we think inflation for this year may peak around the 7% mark and then start coming back down, mainly because of the higher base effect that is there. So we don't think that is going to be too much of a problem for this year at the moment.
Thank you. So now back to Dr. Nishan, and I'm actually very excited to hear your answer back to the local election question. And I know this is, you all do yeoman service with mantri.lk, and you're fact checking. You must be overtime right now with all the election promises maybe that are being started. But what is your view on its impact on the IMF discussions and future policies and to our lives as individuals?
So elections always add, Nicole, a dimension of risk into play. So if you look at it historically, you can see that Sri Lanka always has run higher budget deficits in election years. So if you look at the average budget deficit, which is around 0.5% of GDP in non-election years, it's about more than 6 times that in election years. Right. So that means that governments sort of go for bust. Of course, this is hard to do prior to the second tranche of the IMF disbursement, because if the government's fiscal discipline moves too much in the wrong direction, then there may be challenges, and that's also politically consequential. Election adds, 2 kinds of risks. One is the risk on government behavior and potential misbehavior during an election year where it's trying to win popular support. And the second kind of risk that election brings is policy uncertainty with change in government. So Sri Lanka would always have been better off having an election behind us rather than in front of us, because people are looking for stability in policy, and especially in times like this, elections create a lot of uncertainty, a lot of wait and see. So I think even from the point of external investors, they're going to try and wait out the results of the election. So Sri Lanka gets into a little bit of a limbo, I think. The argument in 2022 and 2023 to postpone elections or not have elections immediately was on the mistaken idea, or now retrospectively mistaken idea, that somehow this debt restructuring and getting back on track could be done very quickly. But in reality, I think Sri Lanka needed to build confidence that the government is there for 4 or 5 years, and that's why having an election as quickly as possible is really helpful in going forward. There are, of course, elections are not the only dimension of risk that Sri Lanka has. Sri Lanka has, in general, risks of government policy implementation. So even in a time of great stress, we have an IMF program in which by end of November, the government was supposed to have completed 73 of the 100 tasks it set out. It had completed only 60, which means that there is this difficulty that Sri Lanka seems to have in keeping up with its commitments and delivering on them. And the IMF also sort of said, look, there is very significant increase in the risk of the program going according to plan. So in its last review, the IMF said, that governance, revenue administration are key areas of difficulty, and the risks of program slippage and failure had increased significantly since the start of the program. So I think we must be aware of those policy risks also that come in, that does the government actually, take the pathway seriously and work to deliver on it, and there are technical risks. Even while you're implementing, are you achieving your targets? I'll give one example and perhaps we can get into audience questions. When we started the program, the IMF had both a target and a projection for debt to GDP. So it said, well, the target is 95% debt to GDP by 2032, but the designed program had a projection of 90.1% debt to GDP by 2032. You had to have some kind of buffer. By the first review itself, the IMF has revised the projection because Sri Lanka has had so many slippages. Now it is 93.9% debt to GDP on the projection. So in a sense, within 7-8 months, we have eroded 80% of that buffer. But we are looking at a 10-year horizon. So I think, the critical issue for Sri Lanka in managing risk is not just about elections and policy uncertainty. Is the government doing its job? Is it actually planning correctly and executing correctly to stay on the path of sustainable recovery? And later on, we'll come back to maybe when we discuss with the audience what else we need to do for sustainable recovery in debt restructuring. But I think this set of policy risks of government action, the election-related risks of what's going to happen and the uncertainty, and on the technical side, that we are struggling to make everything match. For instance, the central bank does have a target to keep inflation at 5%, but it would also like to keep interest rates low. Both these things are hard to do in the current climate of increasing prices, increasing taxes. Not everything in the plan actually is coherent in that sense. And so you're going to see different types of risks and slippages creeping into the system.
Okay, so a lot to digest, and I guess we'll all have to hold our breath and see how the elections play out and everything unrolls. But thank you, that was a very comprehensive answer. So as you mentioned, I think we can move into the audience live Q&A now, and thank you. You all have been sending your questions in, and please continue if anybody has not started to send it in. You can now send your questions in. So Dimantha, this question is for you. So we've spoken about the banking sector. Do you think NBFI sector can perform better in the coming year, and on what basis would you make your predictions?
Yeah, so if you look at it now, if you look at the NBFI sector, I think bulk of the lending is related to leases, and there's a few companies going into gold loans and other SME lending. Very few companies are doing SME lending, and also if you take that SME lending, that is somewhat again related to vehicles. So in such a situation where, in the current context where vehicle ban is going on, and of course on an IMF program, you can't have bans going on a continuous basis. So at some point the relaxation has to come in, possibly at least with higher taxes. So I think in order for NBFI lending portfolios to really start growing back again, there's having difficulty in maintaining the portfolios at the moment. So in order for that to happen, you need to have the vehicle market actually come into play. So earlier there was talk of by April some amount of relaxation, at least in the smaller vehicles segment. However, we don't see that at the moment, and at least not any official news on that front. So I think it's going to be difficult for NBFI sector to keep up with the lending portfolios that they are having. So it's we are already seeing some amount of contractions happening. So without new lending happening, so earnings are likely to have a hit. So on the compared to the banking sector, we are already seeing banks starting to lend. At least some of the consumer lending is happening. Loans are getting rescheduled. Then the SMEs, there is some amount of business activity happening, especially on the tourism front. We are seeing a significant amount of activity happening there. So I think it will take time for it to at least trickle down to the NBFI sector, because the type of client that they have is slightly different to what the banks have. So we feel that it will take a bit more time for the NBFI sector to come out of it, and obviously we are looking at second half of the year. Obviously it needs to have some help from the vehicles market being relaxed and so on.
Thank you. So actually, you answered a question that somebody had addressed to Vish, but I'll ask Vish anyway what his view is on lifting the vehicle imports, or the ban on vehicle imports.
Yeah, so obviously the ban was put in, to stop the foreign exchange outflow. But I think, like Dimantha said, it cannot be there forever. We were really hoping this whole thing of, electric vehicles will take on, and, some amount of imports would be allowed, because, you suddenly have a 3 to 5 year ban, and then you have a very, very aging fleet in most of the, if you take the transport sector or the private transport sector, you have a huge aging fleet, which is not good going forward. So I sincerely hope by at least the end of this year, there'll be some relaxation with some controls, notwithstanding allowing of, luxury vehicles that they can hold on, but at least the commercial vehicles, they need to allow for businesses to prosper.
Yeah, I didn't think of that aspect. You're absolutely right. Nishan, this question is for you. I think after your last answer, excuse me, after your last answer, one of our audience members wants to know: are there any checks and balances in place to ensure stability despite any government fluctuations?
The main check and balance, so Sri Lanka can have two forms of checks and balances. One is internal checks and balances. The other is external checks and balances. And in Sri Lanka, typically internal controls haven't succeeded very well. One example is we have a Fiscal Management Responsibility Act in Sri Lanka that was passed around 2002. We actually violated that law for 20 years running.
Wow.
But there's no one to punish, because Parliament itself votes a budget that actually violates the law that the Parliament has passed. And so the IMF now says, let's have another Fiscal Management Responsibility Act. We can only hope that that one puts in tighter controls. But I think the ability of government to not act in a way that has adequate checks and balances on financial management internally has been one of the reasons why perhaps we've ended up with the IMF 17 times now, right? But each time you get into an IMF program, there's some extra check and balance, because the governments also don't want to too easily have the program suspended. So that acts as a check.
Right.
And certainly till the debt restructuring is done, I think there is interest in keeping within the IMF guardrails, as it were. Even then, the first tranche or the second tranche got delayed by 3 months because the government hadn't done enough to keep up with the commitment. So I think we have to really, the IMF at this time has recognized that governance is the critical issue for Sri Lanka. So it's done a governance diagnostic assessment that was published in September. Civil society organizations also have done one that is quite similar to that. And I think the IMF is now bringing the ideas from that diagnostic assessment into the program. So you can see a lot more governance issues put as structural benchmarks in this forward program, because the IMF has, with discussions with the government, added 75 new commitments to the program. And of course, there is about 35 that is now running or coming from the previous set of commitments. So total 110 that are current. But in this 110, now there's a much larger proportion, I think about 15%, that are governance related. So I think it's clear, everybody understands that Sri Lanka's problem is not just financial. It is significantly to do with governance. And I think we mustn't just leave this to the IMF. The businesses in Sri Lanka, the chambers of commerce, must get interested in solving that problem. And I think when there's enough internal interest, also we will have a stronger commitment from the political establishment to get that in place. So the short answer is, clearly Sri Lanka doesn't have enough internal checks and balances. This may explain a lot of why Sri Lanka is in the current situation. The IMF does act as a significant check and balance, but this time they are upping that, amplifying that by adding governance, related actions as structural benchmarks, not just commitments, the highest level of commitment, if you like. And we must hope that Sri Lanka is able to now deliver on that as it moves forward.
Thank you. Vish, this question is for you, and I might preempt it by just clarifying that Sunshine has exited the plantation segment as of, it had, and it has not re-engaged in the plantation sector, am I right?
Tea plantation sector, so we still are in the palm oil plantation.
Sure. So the question for you is, what is your take on the plantation sector, I guess in general, and is it a good sector to be in for the future?
Yeah, I think plantation sector is here to stay. It's not, Sri Lanka predominantly is still agriculture-based economy, even though there's several attempts that has been made to move away from being a heavily agriculture dependent to non-agriculture. So plantation comes under that whole base. It's one of the largest employers of Sri Lanka, employs over 300,000 people directly, and then so many indirectly. So I think, since the privatization back in '96, when the government was losing colossal amounts in running this plantation, privatization has helped government's loss, and also there are lease payments by the plantation sector paid to the government, and taxes being paid, much more healthier balance sheets of all these companies. So I think it's a good sector as long as there is no interference from whatever the government who is in place. The continuous interference usually ends up having problems in the plantation sector.
Thank you. So that's really interesting that you highlighted the positive outcome of a privatization effort previously. And on a similar note, Nishan, there's a question on what is your timeline for the divestment of SOEs, and what sort of, what are your thoughts on how effective it can be and
Yeah. So I think the main problem created by SOEs for government is that they have become politically utilized for the interests not of society but of those in leadership in government, and that they actually either make losses or they create very high costs for society, or that they don't give an adequate return for the investment that society has made. So we can give examples. The Sri Lankan Airlines, for instance, we know that it has made colossal losses over time, which then people have to pay through increased taxes. We see Ceylon Electricity Board that, when you try to do what they call, cost recovery pricing, the price turns out to be higher than any other country in the entirety of Asia. So Sri Lanka is running the highest electricity prices today at every level of consumption. So now if you look at up to 30 units or 100 units or 200 units or 300 units, Sri Lankans are, the government is effectively claiming that its cost recovery pricing not even is higher than any other country in the region. So that suggests that enormous inefficiency, corruption has got built into these institutions, and they need significant restructuring. And I think the risk, of course, is that you might privatize the institutions that make a profit and continue to carry the institutions that make a loss. So the solution is not simply to pawn your jewelry or sell your jewelry and just cash some money in temporarily, but to solve the management and structural problem. You can solve it by divesting things that are being run inefficiently and badly, or you can solve it by improving its management and running them a lot better by rooting out corruption. But the caution I think that many experts in the field say is that a crisis is a really bad time to sell. So when you're deep in crisis and your whole country is on a cloud of risk, it's very hard to get value for money, because the investor or the person coming in is able to demand a very large risk premium and a return, and that impacts your price. So ideally, you should be trying to do your restructuring and rooting out corruption, fixing the problems, making it a more viable business, and also maybe waiting for times when the risk premium is not so high if you want to get good value for money on your SOEs. So that's the challenge, to focus on selling the things that are genuinely a burden, to combine that with management, restructuring, and rooting out corruption and inefficiencies, and to get, when you do sell, to make sure you're doing it in a climate that gets you the best value for money for what investors are taking.
Thank you. I mean, it seems a mammoth task, but we hope that there will be some inroads made with the SOEs going forward. Dimantha, if I can just ask you, one of our audience members has simply asked what your 2 sector picks are for 2024.
Of course, on the equity market, we are actually very bullish with the decline in interest rates. So I think we are very, on one side, we are very bullish on the banking sector. We are seeing recovery happen. NPLs sort of we are expecting to bottom out in the December quarter, and with the economic recovery, some improvements there. And then my second pick is tourism sector. So we've been very bullish on the tourism sector, and it has performed as expected, and we think there's a lot more value to realize in that sector as well. So later towards the year, we think apparel and consumer sector are also some of the picks that you should be looking at as the economy recovers, with the consumer demand coming in, possibly with the US recovering and the orders from the US coming in. So both those sectors are also potential counters, but my 2 main segments are tourism and banks.
Thank you.
Nicole, I want to say something about questions like that.
Please.
That people ask, okay? So I want to say, look, if you really want to know where to invest, you shouldn't ask it in a public forum. because once that information is out there, the advantage is going to be lost, right? Because everybody is
That
now
is
going
true.
to act on the idea that this is a bullish sector, and when everyone does that, whatever benefit the prices change to take the advantage out. So in economics in general, if I think there is a instinct to have a herd mentality. If everybody is doing something, you do it too. But actually, if you do it when everyone's doing it, you're not really going to have an extra advantage. We say that that advantage is already priced out, okay, or priced in to the prices that you're going to get. So in a way, one is, of course, what I'm saying is, please don't hold Dimantha responsible as a director of First Capital. If these things don't come around, first ask him, Dimantha, are you moving around in a helicopter? Because if you knew so much, you should be making all that money, right? There is an element of estimation, evaluation. And the market keeps changing. So what is true today can quickly not become true in a week.
Right.
So you've got to make careful judgments on fundamentals, understand your risk appetite, understand the duration for which you're willing to invest, and always invest in the long-term health of something. Because if you're a speculator trying to buy and sell to make a quick buck, you could also play blackjack in the casino or the roulette wheel, but you must expect to lose just like you expect to gain, and you must understand that that's what you're going in with. So all to say, Dimantha is a great analyst, but you should accept the risk that you're taking on the advice that he's giving.
Very good point.
That is true.
Yeah, thank you for that. Well, I could personally listen to the three of you for the next couple of hours, but unfortunately, all good
So I
things
have one thing to add as you close, yeah.
must come to an end. So maybe before I close, Nishan, and any of you, any closing comments would be welcome.
Yeah, sure. So I'll go in first. Basically, all I want to say is that we've come out of we are sort of the economy is sort of on a recovery trend, but still there's a lot of uncertainty that is out there, and that can trigger at any time. So at this moment, as there's uncertainty getting cleared out, I think it's a good time to start to invest, go into these stocks. If it's going into bonds, probably the time is now. Obviously, declining interest rates, it's a time good for equity investments. So basically, first half of the year, it's looks to be a great to go in at the moment. And however, just a word of caution, where we are going into an election or multiple elections during the second half of the year. Usually there is uncertainty that comes with elections. So with that, especially policy uncertainties that does come with elections, that will affect capital market decisions at that point of time. So yeah, that's what I want to add.
Thank you.
Yeah, I guess we have spoken a lot about policy, rates, etc. My close to the audience is the word election has been mentioned many times, and that's in everybody's mind. So my humble request is use your franchise wisely. Don't make the same mistakes that we have made it again and again. This is your one big chance to use it wisely for the betterment of Sri Lanka.
Absolutely.
Thank you. And Vish, to add to what you're saying, Sri Lanka is one of those rare countries where you have, you can not only vote for the party, but also the person. So when you have that advantage, people are far more responsible for exactly who is in parliament, not just what party, because they are specifically putting down the name of a person or checking off the name of a person in the ballot. And I think the voters are strongly responsible for the outcome. But I want to end, Nicole, by connecting to a question you asked me right at the beginning. When does the debt restructuring happen, you asked? Sri Lanka needs to get debt restructuring done quickly just to get a move along the path. But actually, just as much as speed, you also need adequacy of restructuring. So I said our buffers are already kind of contracting and thinning out, which means the debt restructuring we do now is the last chance we have to very significantly stay in get into a safety margin and a safety zone, and to give Sri Lanka the ability to stay in the safety zone rather than go on the fence and be considered dangerous, risky, and have a snowball effect of that. So I think we must be careful, and I see some bankers and others saying, let's get it done fast. It doesn't matter, let's finish it. But actually, countries that do that are back restructuring their debt quite quickly. And Sri Lanka the main thing to avoid is not delay, the main thing to avoid is returning to this same place and restructuring again. For that, you need not only speed, but adequacy of restructuring. So we've done many calculations now and presented it to government and others. We think that Sri Lanka should be shooting for at least a 40% haircut at current coupon rates. So if you, of course, give the higher coupons on your restructured debt, you have to increase the haircut to offset that. But if you keep the current coupon rate, which is around 6.5, then you should be aiming for about a 40% haircut. Now, technically, there's a lot of analysis behind those numbers that I'm giving that we are not getting into now. But getting into that minimal adequacy zone, I think can be quite important for Sri Lanka, given what we are seeing in terms of the risks that can play out.
Thank you so much. I'm sure nobody wants this session to end. I certainly don't. But let me extend a very warm note of appreciation on behalf of First Capital and all our viewers to the three of you for giving us such an engaging and exciting discussion. Personally, I found it very exciting. Lots of ups and downs in the outlook, but it feels like we're moving either way. And for our viewers as well, I want to thank you for being engaged and for driving our discussions. I truly appreciate it. I just want to mention that before we wrap up, there will be a survey that will come up on your screens. And the purpose of the survey is simply to find out how we can do this better. And we would love to hear from you all, so please do. So as we bring this investment strategy 2024 to a close, we really hope that you feel empowered as you continue on your journey in 2024 with confidence. So thank you and good night.
The journey of First Capital began decades ago when we became the first financial services provider of its kind in Sri Lanka. From our inception on, we marked many more firsts, such as being among the front runners to be listed on the Colombo Stock Exchange in 1994. In 2001, subscribed to be the first ever dollar-denominated bond and becoming the first to launch the Platinum Bond and manage Sri Lanka's first AAA debenture in 2014. As well as being the first to digitize account opening for unit trusts and government securities investments in 2021. Leading us to become the first in our sector to be listed on the LMD Top 100 and be recognized by Brand Finance in 2022. Today, powered by our philosophy, Performance First, we celebrate this journey with another first as First Capital becomes the first to 40.